Travillian Next is a division of Travillian, a financial services specialist search and talent advisory firm. Since inception, the Travillian team has dedicated itself to enhancing the return on investment of a company's most important resource, its people.
Well, hello, everyone. I am joined today by a gentleman who is just incredibly knowledgeable about the community bank space and the banking industry, the financial services industry, and started to become friendly with John over the last couple of years. And just really, really excited that he is on a Travillian Next podcast. John, if you want to introduce yourself, I really have no clue how to introduce you. So I'm going to let you do it.
So first of all, Brian Love, it is such a pleasure to be on your show. I get your emails every week with your show, and I was the one who reached out to you to basically beg to be on it. And so I appreciate very much that I have the opportunity to be on it. And I just think you're the greatest. So in terms of what I do, it's hard to describe what I do. But the best way to distill it is that I'm a scholar of banking. I love banking. I think it's one of the most interesting intellectual subject matters that I've ever come across. And I've studied a lot of things in my life. And so really what I do is I'm trying to learn the subject, master the subject, if that's even a possibility in banking, and then to share that knowledge as well as I can.
And when I went to your conference in Dallas in March, everyone was not everyone knew who you were. And they're like, who's John Maxfield? And the best way I could say it is just the banky. And that's who I am as well. So I think we're kindred spirits in that vein. Now, I appreciate you introducing yourself. John came to me and we landed on the topic of leadership, and he was adamant that we don't prep. So you're getting this stuff live, basically, and unfiltered. We do have a surprise a little later for John. So you're just going to have to see what that is. But let's dive in. Leadership at your conference, you had some of the most amazing inspirational leaders in the bank landscape in the room. Folks like Scott Deeser, Brent Beardall, Ross McKnight, just amazing stories, people that were just wonderful to talk with and network with in between. What is it about leadership that excites you in this space? Those types of people.
So first of all, let me say that, and this is an important but nuanced distinction. So I don't call it a conference, I call it a symposium. And the reason I call it a symposium is because you go to a lot of these conferences, Brian, and what are these conferences? Are these conferences for the people who come and pay to come to them to learn? No, that is not what these are. These conferences, the typical conference is to make money off of the people who come to them and who attend. They're basically the chattel. Right. In my case, that is not what this is. This is not about making money for me. This is genuinely about making an impact. And if you want to make an impact in this country, you want to make a leveraged impact. And there's literally no better place to make an impact than the banking industry, because no industry is leveraged like banking. And the thing that I have learned about bankers, because I've developed a network of some of the top bankers, most of the top bankers in this country. And the thing that I have learned about these people is that they are incredible people. And they have gotten kind of shortchanged reputationally because of kind of how society has always viewed banks. And so nobody's anointed me. Maybe I've self-anointed myself, but really what I kind of perceive my duty at these events is to make bankers feel good about what they do, because what they do is so incredibly important. And also to set the record straight about when you look at the history of banking, bankers are not these greedy fat cats who just try to make money off of other people's money. These are the people who are most involved in every community that you go in, whether it's a big community, a small community, whatever it is. Bankers are really they stand at the narrows of kind of the values of this country. And so that's something that I've just kind of picked up along the way in learning about banking. And that's kind of the purpose of the symposium. And so when you think about leadership in the banking context, here's the reason it's so interesting. So when you look at banking and you compare it to other industries, the thing about banking is that the supply and demand dynamics are completely opposite of what they are in every other industry. And let me give you an example. So let's say you have a shoe store, Brian. And so you have a shoe store and you want to increase your sales. What do? You drop the price of shoes. Let's say you drop it way down to $10 a pair, right? Well, if you drop the price of $10 a pair to $10 a pair, you're going to sell a lot of shoes, right? But there's a limit to how many shoes you're going to sell because we all have houses or apartments or whatever it is. You know what I mean? And like there's a physical constraint in terms of like where are you going to stack all those shoes? Well, banks, that's not the same situation with banks. Banks sell money, right? And so you think about it like this, like, okay, you're a bank and you say, so like, John, we're willing to give you a loan for 100 basis points. That's always going to be 100 basis points below the prevailing rate. And it's going to be non-recourse. And the duration of that loan is really up to you. There's basically an indefinite duration. How much money would you want to borrow? And the intelligent, rational person is going to say, I want to borrow all the money. I want to borrow infinity dollars, right? Because like, I don't got to store that anywhere. Why would you not borrow all the money if those were the terms, right? And so in banking, if you adjust the price and terms enough relative to other industries, your demand shoots straight up. It goes parabolic. And so what that means is that in the banking industry, unlike every other industry, okay, the impetus on throttling your own growth is on you. It's on you yourself, principally the bank CEO, but then it descends down from there culturally. Right. And so that is something that humans are not very good at doing, right? Is throttling their own growth. Because think about like how compensation plans are structured, right? Like most compensation plans, they reward you for rapid growth. They reward you for, excessive profitability. And in the banking context, you can achieve rapid growth. You can achieve rapid, excessive profitability in the short term very, very, very easily. And so in the banking context, you are studying leadership basically in a petri dish. It's very, very concentrated because you are studying, are these people truly the best? Are these people able to control not only their environment, but themselves as well? And that is why leadership in the banking context is so interesting to me.
Yeah, that's it. So, I mean, let's talk a little bit, if you don't mind, about the leaders you find interesting and maybe what they've done, whether it be running their businesses or how they've helped their communities. And by the way, yeah, the symposium, I apologize. I got that pen right here. I use it every day. It's one of my favorite pens. Sorry about the conference mistake. But let's talk about some of those leaders because my trade is people. And by the way, one little thing I'll say, John, is you probably would be the most extraordinary recruiter because I do feel like you peel layers of onions on people better than most. And that's what I do as a recruiter, really trying to get to know what makes these people tick and how they interact with their constituents. So tell me a little bit about some of the people, maybe the ones that were at the symposium or others in the industry and who excites you, John?
So when you think about like kind of how I went through what I just went through and that the supply and demand dynamics are exactly opposite in banking relative to other industries, that means you have to have people who can operate in that environment, right? And so what I have found is that there's two conditions under which a person is able to operate successfully in that environment. The first is that you're just a member of the lucky gene pool. You're Jamie Dimon, right? Jamie Dimon's father was a good friend of Sandy Weill. Right. Sandy Weill was one of the folks that built American Express. And then he went on to build what eventually he started with a small kind of a consumer credit company based in Baltimore and built that into what eventually became Citigroup. Okay. And so Jamie Dimon, when he came out of Harvard Business School, went directly to work for Sandy Weill. And so not only was Jamie Dimon like a product of the lucky gene pool in terms of just the genetics that he was that was passed down through his family, but also because of the relationships with his father, he was put into this environment very early where he could learn how to like do deals. And like, look, there's a lot of things you can criticize Sandy Weill about. But like one of them is not that he didn't know how to build an empire because he absolutely knew how to build an empire. And so that's one way. But the second way, and it's because I've gone around the industry and I've developed a network of all the top bank CEOs and I've looked at performance in a different way than I think basically anybody else has looked at performance. Because you go and you look around and like a lot of these publications, they'll do like, oh, like what are the best banks last year? What are the best banks over the past 3 years? That is completely irrelevant. In any publication that is publishing something about like what are the best banks in the past year or what are the best banks in the past 3 years is a publication that does not understand how the banking system operates because of those supply and demand dynamics. You can jack it your short-term performance as high as you want it. But then what you find is the banks on the top of a cycle, the banks that perform best are typically the banks that perform the worst at the bottom of the cycle. Right. And so like when you study performance, you have to study performance through an entire cycle. And when you study performance through an entire cycle, that leads you to a different set of leaders than when you study it in the short term, right? And so when you study it through the long term, you come across people like Richard Davis. He was a chairman and CEO of U.S. Bancorp from 2006 until 2016, and then he was chairman for another year until 2017. You come across a guy named Mick Blodnick. Mick Blodnick was the CEO of Glacier Bancorp. If you rank every publicly traded bank by all-time total shareholder return, so that's the total amount of value they've created since going public, Mick Blodnick is like, he's like 3 or 4 standard deviations out from all the other banks, except for one, and that was run by a guy named Robert Wilmers, and that's M&T Bank. So Robert Wilmers is in that category. Then you get a guy like Scott Deeser. Scott Deeser runs a bank out in Abilene, Texas, of all places, Abilene, Texas. It's the only bank in America that has earned an annual profit every year for over a century, and they've done it since their founding in 1890. In fact, when they were founded in 1890, they were founded in the middle of the year, so they only had 6 months of performance. They were even profitable the first 6 months. And 1890, by the way, was a year of a great financial crisis in the United States. And so the fact that they're able to do that is incredible. And then you come across a guy like Ross McKnight. Ross McKnight is one of my intellectual kind of like fascinations right now. Ross runs a $4.5 billion bank that's ostensibly based in Oklahoma City, but really, and its holding company is based in a tiny town in Olney, Texas, but really where that bank is overseen from, because Ross is the chairman and he owns 78% of that bank, is from his 56,000 acre ranch outside of Throckmorton, Texas. And what you find for the longest time after I developed these relationships, I was just trying to find you're in our business, the quantitative and the analytical stuff is so accessible and so easy to access that you're just trying to look for a quantitative explanation for why these people are the runners run the most exceptional banks in the country. But what you find is that if you are genuinely interested and you are genuinely honest with yourself with your research, you will not find a quantitative explanation for why these folks happen to be in this same group. Because these are banks from the north, the south, east, west, big, small. They have different business models, all this kind of stuff. And then what you find when you step back from that, and when you kind of say, okay, like, listen, I've gone through all the numbers. I've met these people, and I don't just go up and talk to them for an hour. I spend 2 days with them. It's 8 hours one day, 8 hours the second day. And I meet with their friends, I meet with their family members, I meet with all their colleagues, and I ask anything that I want to ask. And because of the trust that I've built among these individuals, they allow me to ask even the most personal questions that you can imagine. And what I have found is that outside of that lucky gene pool category, the second category of people that have proven to be exceptional leaders of banks are those who've experienced tragedy or hardship early in life. And you think like that is such an unusual anecdotal explanation, but it may be anecdotal, but the anecdotal evidence of it is so powerful. And that is simply because you need something to so durably impact a person that it allows them for the rest of their life to operate in this different environment where the supply and demand dynamics are totally, totally different.
Yeah. So, I mean, that taps into resiliency, right? I think even in a young age, Ross's story about his father, which was just, heartbreaking and kind of challenge the audience to kind of link that to who he is now. And by the way, his humanitarian efforts are just amazing as well. I did a little research on that afterwards. But I think resiliency has got to be one element of leadership that I always look for. And by the way, we're going through a period of time right now that's testing the mettle of a lot of bank leadership. Would you agree?
I would totally agree. And, I would draw a finer point. Your point about resiliency is exactly right. But it's important to put some meat around that bone. Okay. Mm-hmm. So what is the resiliency in this context that is so important? And here's what the resiliency in this context is. When you're at the top of the cycle and you run a bank, everybody is going to be pressuring you to do the wrong thing at that time. That is, grow as fast as you can. Keep up with your competitors. Your competitors are cutting rates. Why aren't you cutting rates? Your competitors are growing market share. Why aren't you growing market share? What you have to do as a leader is say, whoa, okay. I get it that everybody is telling me to do these things. But what I know is that doing it right now is the wrong thing to do. And so to be up there and to have a board of directors and to have shareholders and to have employees and to have analysts and to have commentators, everybody, and to have your own self, putting pressure on you to fall prey to that temptation. What Warren Buffett calls the institutional imperative, to fall prey to the institutional imperative. There's so much temptation to do that the inner fortitude that it takes to basically say like, no, like this is not the right time to do that. I'm actually going to give up market share for the next 2-3 years because that is the right thing to do for this institution. And so then you say, well, what is that thing? So that's an element of that resilience, right? But then you dig deeper into that and you say, what is the fundamental thing? And here's the fundamental thing. It is, are you or are you not, as a CEO of a bank or as an executive of a bank, actually committed to your fiduciary duty against self-dealing? That is what it boils down to. It is as simple as that. And all these, Brian, I travel this country. I spend a lot of time with these folks, and you go around, and you ask everybody, oh yeah, the fiduciary duty, yeah, I'm so committed to that. But then you look at two really interesting statistics. Number one, there have been 17,000 bank failures since the country started, and that's a conservative estimate. And then you add banks that were merged or acquired in lieu of failure, you're probably at 22 or 23,000. There's about 500 banks in this country today. So your failure rate is like 4, 5, 6 times higher than your success rate. Okay. So you look at that, number one, and then you look at the second thing, and that is, do most banks over the long term earn their cost of capital? A cost of capital is a nebulous concept, but it is an incredibly important concept. And the general rule in banking is that the cost of capital, at least before the tax break a couple of years ago, was 10% or 10% return on equity. And now it's 12% with that tax break. And when you look at across the industry over time, very, very few banks earn their cost of capital. And you say, well, why is that? And the reason that is, in my opinion, is because the vast majority of bank CEOs are not genuinely committed to the fiduciary duty against self-dealing.
That's an interesting connection there that you make, John. I wanted to talk a little bit more about talent and how good leaders cultivate good leaders, retain good leaders, recruit good leaders. Right? You've got Ross McKnight, who recruited C.K. Lee, which I got to be honest, on paper, is C.K. Lee the prototypical candidate? No, but Ross saw that, and I think C.K. and him, fit like a glove. And C.K. is a warm, incredibly knowledgeable person who possesses a lot of these skills that we're talking about. So I'd love to hear your thoughts on that, and then maybe surprise you after your comment.
Okay, so let me start with C.K. Lee, because C.K. is a perfect example, okay? Mm-hmm. So Ross McKnight, he runs Interbank. It's a $4.5 billion bank, it's got a primarily rural footprint throughout Texas and Oklahoma. Yeah. And C.K. Lee, as a lot of people in this industry know, C.K. was for a long time a regulator. He worked at the FDIC for a long time, and then I think the OTS, for a while. And then he went into investment banking for a while. He was at, I think, Commerce Street with Dory Wiley, and then he was at, I think, Piper Jaffray for a while. And then it was the Interbank was doing a deal. They were buying a bank in Dallas. And C.K. Lee was one of the investment bankers on that deal. And that's how he got to know Ross McKnight. But although C.K. Lee, I think, was on the other side of the deal, if my memory serves me right. And so you think, like, how random is it that Ross McKnight, Ross is a rancher and an oil man. He's also
how many acres? How many acres does he own?
He's got 50. His ranch is 56,000 acres. Okay. Amazing. And that ranch, what's awesome is that he's recreated his great grandfather's ranch. E.P. Davis is his great grandfather. And it was broken down through the generations. And Ross got 500 acres of that as his inheritance. He's rebuilt that entire ranch and bought a section of the Wagner Ranch, which is one of the great big ranches in the history of Texas. And so he's rebuilt that. And so he runs it from his ranch in Throckmorton. Now, he's got two pretty sweet jets that get him in and out of there pretty quick. You know what I mean?
Nice.
I've ridden on them, and it's a pretty nice way to travel. Okay, but Ross has earned it. Okay, make no mistake about it. Ross has earned it, and a guy like Ross needs to have jets like that. There's no question about that. Okay, but when you look at CK Lee, you think like, how is it that some rancher guy, like from like the middle of nowhere, Texas, decides that like the next guy to run his bank is going to be some like fancy pants investment banker? I mean, it's crazy. But here's what I've learned about CK. And CK and I have we've spent a lot of time together, and I have just a tremendous amount of respect and appreciation and affection for CK. And when relatively early on, when he took over as president of that bank, now he's the CEO, we had a pretty extensive conversation about Ross and his new job and all of this kind of stuff. And what I found with CK that I thought was so incredible and explains everything about why Ross brought him on board were two things. Number one, he grew up in an extremely modest situation. His father was he was a crop duster. He grew up on a farm in the Florida Panhandle, and his father would fly planes and then like pesticides, whatever it was, fertilizers on crops. And that is not a high paying job. Okay. And so CK grew up in very modest background, similar to Ross, although I don't think it was the same extent, because I don't think the family tragedy that CK suffered was to the same extent that Ross suffered. But the second thing is that CK is willing to learn, that he's willing to be reprogrammed. Mm-hmm. And let me give you a couple of specific examples of that. Ross has zero securities on his balance sheet. The interbank has zero securities on their balance sheet. And so you can imagine how incredible they've performed in this environment. But the other thing
is variable rates. Yeah. Right.
All variable rate on both sides of the balance sheet. I mean, that bank, if there is no bank, I mean, they are literally the best performing commercial bank in the country, and they have been for the past 3 years. There is no bank that is built for a time like this more than Ross and CK's bank. Yeah. But all of those things go against the kind of the general rules in banking. The general rules in banking are, you have to hold these securities on your balance sheet because you need liquidity. But as you know, and as I know, because we both listened to Ross talk at the symposium in Dallas, and it's these things that common sense, you like when it hits you, you're like, oh my God, that's so freaking obvious. But like for some reason, the connections in your brain that aren't made until you actually hear it. And as Ross explained it, he's like, why would I want bonds? The only thing that bonds do is provide liquidity when you don't need it. And when you do need it, you can't get access to it because it's underpriced. I mean, it's like, you're like, that it perfectly explains banking. Right. You know what I mean? And liquidity and Ross got that. And the fact that the variable rate on both sides, like that is like nobody does that. And CK comes into that environment. And the other thing is that, and this isn't necessarily uncommon, but like because Ross owns that bank entirely, he feels comfortable taking those loan limits of some of those customers all the way up to the limit. I mean, he'll take them all the way up. So they have a very concentrated borrower class, but it's Ross's capital that's on the line. And so CK going in and observing this with Ross and being willing to learn all of this. And the other thing about CK is that he's a voracious learner. He reads like, I mean, the dude, like you'd sit without them. Are you like a professor from Oxford, a literature professor from Oxford? You're a banker from the middle of nowhere in Texas. You know what I mean? CK, he was willing to reprogram himself and to watch Ross and to be humble enough to say like, you know what? I was just completely wrong for decades about these things, about securities, about how you structure a balance sheet. And CK was willing to sit there and watch Ross and genuinely learn. And I think that is what Ross saw in CK.
Yeah. And that's striving to learn and grow. You know, that is so important. And for that, you had some younger bankers in the room at the symposium, and I know that you're trying to promote that amongst this next generation. Now, I know that's a whole other topic to get into, but I do have this surprise I want to show you. And it's someone who's going to join us. And I know you have respect for this person, and they factor into this conversation because I think they're an amazing leader. They've grown up in banking in their lives. They ran a fantastic organization. And
oh God, I wonder who this.
Yeah, I know.
Do they have any dirt on me, Brian?
No, you're gonna love this guy. You're gonna love him. He's gonna hop in a second here, and we'll see how this goes. Even though our conversation was going well, yeah, I don't know. I thought you'd take this. So I think he's going to pop in here in a second. Yeah, give it a second here, and he should be in. Never done this before, by the way. I was thinking about trying to do.
Do I know this person?
Oh yeah, you know him well. It's not CK or Ross, even though we've been talking about them for a while. But he's hopping in now. I was thinking about doing a "This Is Your Life" John Maxfield, and get Jamila to come in, and some other people you haven't talked to in decades, and Paul Davis, and Anyway,
is it Beardall? Is it Beardall?
Nope. Here it is.
Oh, oh I love. So good to see you.
Good to see you, John. How are you?
I'm doing great. I have so much respect for Brian Love, and I could go on for all the different reasons.